Hello and welcome to this Tier Markets daily market commentary for Monday, the 24th of February 2020. The start of a new week brings familiar themes. One in particular seems intent on grabbing the headlines, and today more so than ever, the coronavirus. You could argue that today was the day that financial markets woke up to the real possibility of this turning into an uncontrollable pandemic. That maybe it won't just blow over. From Italy to Iran, new cases continue to surface. Travel links and sporting events are being shut down and cancelled. It's getting serious, and the markets know it. European equity markets would lead the onslaught. As my day begins in the US, the DAX and the FTSE 100 are both down more than 3.5%. The FTSE MIB in Milan is lower by 4.8%. Equity futures in the US have the Dow Jones opening down by more than 850 points. And gold has proved to be the safe haven of choice, with a gap higher on the open in Asia from Friday's close of 1643 up to 1656. Before long, we would touch a high of 1689. It's a full-on panic. FX will be a little more muted in its initial reaction. Yen cross-selling was prevalent as traders expressed their loss of risk appetite, but maybe not quite to the extremes you would imagine. Dollar yen, having closed around 111.60 on Friday, will touch a low of 111.20 in Europe. Euro dollar would also head lower from 108.50 down to 108.05 as euro and yen flows would dominate. Sterling would follow suit, dropping down to 128.87, and Aussie, Kiwi and Canada would all suffer, as you might expect, with the Aussie making a new 11-year low at 65.82. In the absence of any meaningful data releases, would the US session continue to add to the doom and gloom, or would traders find some respite? The Wall Street Open would suggest the former, with the Dow Jones down 900 points at the open. Dollar yen would take a sharp drop lower, touching 110.34. Euro dollar would head the other way, rallying back up to 108.72. You might have expected gold to continue its march higher, but it seems like the market got caught a little long and drifted back to 15.75 before a sudden drop all the way back down to 15.52. Equities would chop around. The Dow Jones briefly down just 750 points. Euro dollar would briefly drop to 108.40 and dollar yen would squeeze back to 110.75. But by the time Wall Street closed, the Dow Jones would be down over 1,000 points. That in itself tells you all you need to know. And gold would blend back up at 15.60. Turning to my technical piece, a messy day to put it mildly, especially for equities and gold. For FX, yen flows would dominate. Looking at a very simple hourly chart, which we have in front of us here, I think it's fair to say dollar yen rallied a little too fast when it broke 110.30 up to that high above 112.20. It should also be noted we have come off just as quickly as we rallied. And as you can see here, the level it had to break for that move to sharp move higher was around 110.29, 110.30. And that in itself should act as very strong support, even in the most volatile of markets. Today we saw a low of 110.33, so that level was almost touched, but it held, and we rallied back up towards 110.70 at the US close. Sometimes keeping it simple in the face of volatility is the best plan. So just keep a close eye on this level going forward. There's always plenty of ways to play it, but if I'm looking at it, I'm sure many people are looking at it. And with that, I hope everyone managed to survive the volatility and had a good start to the week. And hopefully things will get a little calmer as the week progresses. Look forward to speaking to you tomorrow. Cheers.